Hello, everyone. Welcome to this week's weekly market view for Monday, the 22nd of April, 2024 to Friday, the 26th of April, 2024. My name is Vishal. Let's get started. All right, then let's dive down into the Nifty analysis first. So let's open the monthly chart of the Nifty. And this is the current month, April candle. A little bearish, but just consolidating. Right now, no clear sense of direction on the monthly chart. If you go on to the weekly chart, we do have this area of supply here, which is the pro gap. After the news and the war situation, we had this market gapping down on the weekend. Markets are resuming their trend to the upside, but we just need to be a little bit aware about this 22,500 level since it's a weekly level. If you go on to the daily chart now, and you can see these horizontal lines. So these are this is basically where the highest open interest is, and this is more or less a premium tool that is actually given to our students when they come into the premium level courses. And what this tool does is it's able to identify levels of support and resistances on the chart. And this is a dynamic tool. So as and when the open interest changes, this also dynamically adjusts itself to the levels. So right now we can currently see that the 22,500 has an open interest, and we also see 22,000 is also acting as a support level, right? So you have the put open interest at 22,000 and you have the call open interest at 22,500, which means for this week, we could expect the prices to range between 22,500 and 22,000 odd levels. And if you have a supply zone lining up within these levels, then it just adds more to the confluence part of the strategy that we teach at Sher Khan Education. If you look at the 125-minute chart on the Nifty, we did open into this level of supply. Prices did give a reaction now. But because this supply is in the middle, and if the trend is still strong, we might expect to see the prices more or less breaching this level and trying to push further to the upside, because we had this nice strong bounce and a very, very strong bounce from this 240-minute level demand zone. And seems like the trend wants, the trend is more likely to be pushing more towards the upside, and we might see 22,500 being tested sooner or later. So let's keep a close watch on the Nifty and let us see if 22,500 comes first, or we get a reversal from 22,300 and market starts to move further down. Let's move on to the next index, which is the Bank Nifty. So we'll go to the Bank Nifty chart here. Let's make sure. So this is the monthly chart of Bank Nifty. Again, consolidation, nothing very, very clear on the monthly chart. If you go on to the weekly chart, very similar to all the other charts, we also have this weekly supply gap. And more or less, it'll be interesting to see what happens when the prices reach this weekly supply level or this gap level, whether the prices react or then markets just tend to push further to the upside, creating all-time highs. If you look at the open interest levels on Bank Nifty, let's plot the chart along with the open interest levels. So yeah, so currently 48,000 is the level where we are seeing the highest open interest. And you can see today, after the markets went just a tad above this 48,000 odd level, we could see some selling coming in. So 48,000 is going to be acting as a strong resistance, and 47,000 could be acting as a strong support. So we might expect to see Bank Nifty ranging between 47,000 and 48,000 for this week. Let's move on to the next index. We are going to be looking at the Nifty Financial Services. Let's start with the analysis on the Nifty Financial Services. So let's start with the monthly chart. Again, monthly chart is consolidating after bouncing out of this monthly level of demand, very, very similar to the Bank Nifty. On the weekly chart, very similar to the Bank Nifty, we also have this gap, and it'll be interesting to see what happens once the price hits this 21,466 odd level. If we now go on to the daily chart, and if we load the daily chart along with the open interest levels, we can clearly see that the Nifty Financial Services has the highest call open interest at 21,800, but there is one more crucial level of 21,500, which more or less is lining up with the Nifty level. So if all the markets do tend to get into this upper supply level, then it will be interesting to see whether all markets either fall down or then they start to push to the upside. But for this week, based on the open interest levels, it's seen at the moment right now that 21,500 is going to be acting as a strong resistance, and 21,000 is going to be acting as a strong support for the market. Let's move on to the next index, which is going to be mid cap. So let's select mid select. And let's start with the monthly chart first. And if you look at the monthly chart of mid select, we are again consolidating. So again, nothing very clear on the monthly chart. We do have this level of supply from where the prices have been reacting. So it's going to be a little difficult for mid cap Nifty to break this higher time frame supply. And we might expect to see more or less consolidation coming in. If you look at the open interest levels, let's quickly have a look at the open interest levels. So you can see here the open interest levels are pretty much stacked very, very closely. So, and of course, today being expiry, you will see that these levels tend to compress when there is expiry, and then of course tomorrow then the levels will start widening. So for today, since today is the mid cap expiry, 10,750 is the first highest open interest level, and then you have 10,700. So it's more likely that the mid cap Nifty is more or less going to be ranging within the 50-point range for today's expiry. All right, let's now move from the world of indices to the world of currencies. So let's quickly have a look at the USD INR, and let us check what the USD INR is telling us. So as we can clearly see, the USD INR is actually moving opposite. On the monthly chart, it's not showing anything yet. But if you look at the weekly chart, it's trying to move down and probably get into this area. And that is the reason why most of the indices are also trying to push to the upside. So keep a close watch on the USD INR, because sometimes the USD INR gives us a very, very clear direction on where the indices are likely to move. And although you might be trading or not trading the USD INR, it doesn't matter, but you can use the USD INR as a correlation index to see where the Nifty is likely to head. So keep a close watch on this 82.96 odd level. On the basis of open interest, let's check the open interest for USD INR. And the beauty of this open interest tool is that this open interest is not only plotted on the indices, it's also plotted on stocks, and it's also plotted on the commodities and the currency pairs. So it's a very nice tool to have. And if you look at this, this is your closest level of demand. Now, there is no confluence of any open interest around this level of demand, but we do have 83.50 and 83.25. So if USD INR continues to move to the downside, then it is more likely to take support at 83.25. And if it tries to push to the upside, then 83.50 is going to be the first obstacle. After that, 83.75. So we might expect to see a more range-bound movement in the USD INR for this week. All right, now let's shift from the world of currency pairs to the Nifty heavyweights. And let's first start with Reliance. So from last week, I have started including one more stock because there was a request to include an IT stock. And I'll be talking about that stock in today's session. So let's first talk about Reliance. So this is the monthly chart of Reliance, looking pretty positive, although the monthly candle is red as of now. But of course, this can change. And if you look at the weekly chart is also showing consolidation but with a lot of positive candles. If we now move on to the daily chart, and let's also check the open interest levels, you can see that within this area of demand, we have this 2,900. So this is exactly the confluence that I was talking about, is that if you have this confluence within your levels of demand, then these levels tend to play out very, very well. And right now, 2,900 is the strongest support, and 3,000 is going to be the strongest resistance for Reliance. So if you're expecting the Reliance stock to move to the upside, then 3,000 can be the first possible exit. And thereafter, 3,100 based on the open interest level. So keep a close watch on this. And now let's move to HDFC Bank. So let's quickly look at HDFC Bank. And I've been talking about this stock since a very long time. I've been saying continuously that we are in this level of demand and it's a matter of time before, this stock does take off to the upside. And that is pretty much that has eventually happened. From nearly 1397, the stock has now moved to the upper levels. Today, we are seeing a little bit of a pressure on the stock after the weekly open, but still this could be a consolidation before the move to the upside, because now the supply is a little further away from price and we are closer to a level of demand. If we look at the daily chart now, so let's plot the HDFC Bank chart along with the open interest levels. So you can clearly see that 1550 is acting as a strong resistance point. And this was also the area initially. There was a 30-minute level of supply there from where prices reacted. But now we are again coming into this area of demand or so-called support. And there is a possible likelihood that if prices come to this area, they might consolidate before moving to the upside. So 1500 is going to be acting as a support for HDFC Bank, and the resistance is going to be 1550 first, and 1600 is going to be our second level of resistance on HDFC Bank. Let's now quickly have a look at Infosys. And if we look at Infosys, let's start off with the monthly chart first. So we have hit this monthly level of demand, and of course, whether it's earnings that brought this level there or negative news or positive news, it doesn't matter. As a demand and supply trader, we have to keep news a little bit aside from our analysis, but definitely news is a mediator, and sometimes it's also going to help our trading decisions. So now that Infosys results are out, we are in this monthly level of demand, and from here we might tend to see a move to the upside. If you look at the weekly chart, this nice drop-based rally of demand, prices have come here now and they have started showing some move to the upside. So now from here on, where can the prices go towards? So if you go and check the daily chart, let's go on to the daily chart of Infosys and let's align it with our open interest levels. So now you can clearly see that 1400 is a strong support. So the belief is that by the end of expiry, Infosys should not close below 1400, and up to expiry we should get to 1500 odd levels, because that's where the highest open interest level is. And usually what happens is that when prices fall drastically to the downside, all these call writers of 1500 and 1600 are eventually going to book profits on their shorts. So when they start booking profits on their shorts, then you will see a short covering or a very, very strong bounce coming on that particular stock. So based on the open interest analysis and based on the concept of demand and supply, 1500 could be the first target where the prices could reach on Infosys. And the next level that is also of interest is this level of supply. Now there is no open interest level here, but we don't know, because maybe as the prices start moving to the upside, the 1600 level could fall down towards the 1540 level as well. So keep a close watch on 1543 to 1577. And right now prices are bouncing from this level of demand. So be careful and avoid shorting Infosys at the current price levels. All right, everyone. Thank you so much. And this is it from this week's analysis. I hope you enjoyed the analysis for this week. If you do like our channel, hit the subscription button and become a part of Sher Khan Education YouTube channel to get notifications. And if you have any comments that you would like to put in, if you are looking at anything in particular, you can just mention that in the comment section, and we'll definitely look forward to what your comments are. Hope you have a wonderful week, everyone. Happy trading, and see you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.